All right, so this video is a follow-up from my last video where I went over a gap day failure and the end result was chop. And the reason why I wanted to title this video "Losing the Forest Through the Trees" is because if you approach it a little bit differently, where you know what's supposed to happen, you take action based on that, and uh, but more importantly, you don't lose the forest through the trees. You don't you go into the day with a quasi bias, quasi expectation of what price should do, and then more importantly, what it shouldn't do, and then you adapt as time goes on throughout the day when you get more market generated information, primarily from the market profile. So I want to go through this day one more time and then essentially show you, or show me, because I'm the only one watching these videos, show me where you made the mistake and just where to have a little more self-awareness. Okay, so without further ado, let's do this here. Just a quick recap of the market profile here on the left. This is a gap up. We're gapping up from the prior day. This was one that we had a very big drop and rally from the Fed Day announcement. So emotional selling, and we know that price can traverse the that retracement or retrace that drop and that recovery from the Fed day. So that's just an expectation to go into the day, is to potentially look for that because it does happen. All right, pause for a moment. And just to recap, it's a gap up scenario. So yesterday had a big rally on the FOMC day. We went over that. And then this was our earnings announcement last night. We had a big rally up in the overnight session, with coming back about halfway down, and you're anticipating the gap, right? You're anticipating the gap fill. You want to go in the direction of the gap, and you want to take a long when price hits here, maybe as it comes down here, what have you. So it's like you're going into the day with that expectation of gap fill, gap no fill, but generally speaking, you want to go in the direction of the gap. So let's hit play here, and we'll go through the two trades that I had. Price going down, delta going sideways. So I took a long right here. Going up, we'll switch over to this one. We're now in B period. Problem was B period. Yeah, B period. We took out B period low, so that was the first kind of sign of failure. Came down, took out the stop loss. C period came down even further. So now you're thinking, okay, we're going the other way, right? We're going the other way. The weird thing is delta is not going the other way, right? So if you're incorporating delta into the trade decision, then it's, you're not taking a short here because delta is going against you. And in most cases, I agree with that. It's just I'm heavy using the market profile for my trade decisions right now, and so that generally gets a little more weight than delta. But here we are at 10 o'clock. We are an hour and a half into the session. We're building value higher, right? And we just broke below the settlement. So my thing is, we filled the gap. We failed to move up in B period, and then I'm going to take a short right here. So that's the logic. So price moves down. D period, we're doing good. Delta is not going with it though. And just generally, you're having lower volume. Nothing crazy for late morning. Our vol is 165, so we're up there. So short right here, you're wanting to see continuation right? Because what should happen doesn't. After the gap fill, you should have moved up higher, but we didn't. So the idea is now let's traverse the entire value area. Excuse me. So made a poor high in E period. It's not looking good for the short. E period's broken, shoot. And then E period high was my structural high. So this is where, okay, we're down 48 points on the day. The main idea was to take a position going with the gap. That failed, so we take a position against the gap. And, this is, shoot, down 50 points. Let's hang it up for the day before things get real bad. Here's where you miss out. If you're actually letting the trade come to you and not taking, the bias into the day, factoring in just like the gap fill and failure and what should happen doesn't. Let's hit play here, and I'm just going to let another trade come to me, regardless of what the context is. Factoring in the context, but also letting the trade come to me. So let's hit play here. So we're going to hit play here. Trade just was taken out. So my short was taken out. So it's like, are we going to walk away or not? Let's let another trade come to us. So here, what should happen is, generally you only have 2 trends in a day. So to me, this would be 1 and this would be 2. So we should move higher. We failed down here. This is a lot of excess. We hit this point of control, showed a lot of excess below it. Price should come up. Here is the problem. Right here, this is a great trade. Okay, you've got the expectation that we failed going lower, so we should move higher. That is the whole idea. We're not getting into that trade because you're already down 50 points on the day, but just letting the trade come to us. Here's the things that you have in your favor. A lot of excess right here. You think we're done going lower. You move up. F period showed some promise, hitting the prior day high, moving past settlement, which is prices just doesn't care about. And then the problem is you have G period has a lot of overlap with F period. You should see a lot more follow through with that, right? You should see a lot more follow through to break the prior day high. And then also you shouldn't have a break of one time framing down here again. Excuse me. We already have a break of one time framing here, have a break of one time framing here, and now we have it a third time to where you shouldn't have that. So the point is, if you look over here on the execution chart, this level is the volume weighted average price, VWAP. You've got settlement right here. This level is also confluent with the prior day high. Okay, that's huge. That is a big level. Okay, prior day high and VWAP. And then also on top of that, check this out. Delta's been doing some crazy stuff all day. We've moved down. Delta didn't go with it. It's just been going sideways. But on this rally back here, this rally back had a decent amount of delta with just even less volume that we showed in the morning. So this doesn't matter what delta did back here. You can just tell with this move up right here with delta and that volume relative to the rest of the day, that rally is very, very weak, right? It's very weak. And once we get up here and start to plateau, it doesn't really matter if volume picks up on the sell side because you didn't have any volume up on the rally, right? So this is my point with like hitting a trade right here. I mean, shoot, let's see what happens. Let's see what happens. I'm gonna hit sell, put my stop loss right here. Point of control would be my first target, right? Overnight low, we're just tagged that. Okay, let's just have some fun. Hit play. All right, so we're off to the races. Again, just letting that trade come to me. Hit my first target. you're starting to see delta pick up. And here's the thing, you've got everybody that was long right here. That's this move up. Anybody that's long right here is going to be offsides. So we know it's low volume, but we know it's a lot of, I don't know, smaller traders, I want to say. They're going to be offsides, and that's likely why we're seeing a big drop off on this very fast. Okay. So we're going to use the volume or the market profile to help us with the trade management. Let me move this down here. I'm going to hit play. I period. So main thing is you don't want to see us go back deep into H period. That'd be bad. So let's just see here. I period. Ooh, okay. And then I'm going to have actually one of my stop losses right here. That's going to be number 1. Okay. Let's see what happens here. So I put my stop loss at the bottom of the range right here. So if we, I mean, that's a big gain, you know. Don't want to see overlap. This is looking good. It's looking good. Just tag that. I want to go over to my higher time frame. So yeah, we just cleared that right here. We've got, okay, we're looking, we don't want K period to break I period. So if it does, we're going to start moving our stop loss with structure. Okay. K period. Let's move it to K period. We're going to move our stop loss right here. Okay. Let's go. Let's keep going. M period. Looks like we're losing steam. Down here, you've got a lot of selling, not as much buying, and selling kind of drying up. So I think I want to lock in 14. Yeah, let's lock in right here. So even with those 2 losses, staying with it, you know, staying with it and seeing where, okay, we failed to go lower, but holy smokes, we're going to fail to go higher. Right? We're going to fail to go higher, and then that makes this look like a much different day, right? So it's just what should happen doesn't. We broke down. We should gap up. We didn't. So the opposite must be true, you know? So anyway, take that away. Let the trade come to you. Keep an eye out for good setups. Don't let the prior trade affect the next one.